Good morning, everybody. This is Morgan Smith, partner and financial advisor with WorthPoint. And I'm going to give everybody an update on the situation out there and kind of the financial markets and some things that will be insightful for you from a personal, financial, and business financial standpoint. Going to talk about, give some insight into some questions that I've been hearing from clients and colleagues and people I've been speaking with. First off, I can't guarantee you'll get some good insights from this conversation. I can't guarantee that I won't be interrupted by my 6-year-old son who's downstairs diligently working on his homework, and he may come up here and ask me for a question for an answer at some point here. So first off, this is, there's a lot going on here. Everyone's had bouts of anxiety, and I hope everyone's safe and healthy. And on that note, let's stick together on this. And from here, what I'd like to do is just share my screen and start moving forward here. So again, Morgan Smith, partner and financial advisor with WorthPoint. Today is April the 7th, 2020. WorthPoint is a registered investment advisor, and we are fee only. And we focus on financial planning and wealth management for families, business owner, trusts, and retirement plans. If you have any questions after this conversation, you can reach out to me at morgan.smith@wpwm.com. And of course, you can always go to our website here at WorthPoint with an E, invest.com. So I told you I've been speaking with clients and colleagues and friends of mine, and these are some questions that have been floating out there we're going to cover today. Has the stock market bottom? Are there any opportunities and risks? Should we be investing in bonds? Business owners, can they get any relief? Any planning strategies we can take care of or take advantage of? And kind of talk a little bit about paying down debt or not, given the current state of the market. We're registered by the SEC, and I will be speaking about some high-level investment concepts. I don't want you to construe any of the advice I give to be anything particular for any individual. It's just kind of general commentary here. On that note, this is our disclaimer. If you want to pause and read this more, feel free to do so. So first question that's out there is, has the stock market bottomed out? Is now the time to buy stocks? We're going to look at the S&P 500 index in just a moment as of today. And remember, when you're looking at indexes, you cannot invest directly in these indexes, and they don't reflect expenses and fees. And historical performance, as I'm sure you've heard before, is never a guarantee of future results. Having said that, let's go ahead and look at CNBC today, 11:48 Eastern Time. This is kind of what the market's doing today, and what we're looking at is the S&P 500 index, also known as SPX. And if you scroll down here, we can kind of look and see what it's done year to date. Negative 16.53 year to date, and for the last year, a negative 0.78. So yes, the S&P 500 has been down, and is that significant? Absolutely. Have we seen a downturn like this before? Yes, historically, I think we've seen these kinds of ups and downs in the market, although this is kind of a unique time with everything going on with the COVID crisis. Going back to my presentation here, going back to this question, has the stock market bottomed? Well, you've just seen how far the stock market's gone down, represented by the S&P 500. The answer to this question is nobody knows. Nobody knows when the market's going to turn around. Nobody knows what the bottom's going to be. Nobody knows when it's going to turn around, and really what the magnitude of the loss or any kind of future recovery is going to be. And unfortunately, that's one of these areas in investing categorized as an issue that we really don't have control over. And what we do know is that some people may get it right. Uh, Maybe they might get out of the market early or kind of time it right. But whether or not that's luck and skill is it's really hard to decipher. And you really need somebody to be able to have a record of over 10 years to try and flesh out whether or not it's luck or skill. So this is, I don't want to just kind of blow this off and say, hey, look, nobody knows. It seems a little frustrating, but it's one of the fundamental ideas that people who really understand long-term investing concepts understand. Some of the smartest minds in investing is that we can't predict the future. We know that intuitively. So let's incorporate that into our strategy. So don't be trying to time the market and um, figuring out whether or not it's time to buy stocks or not. What we can say is that are stocks cheaper than they were January 1st? Yes, by about 16%. And whether or not that fits in with your investment strategy is a further discussion to be had. And again, this whole concept of, I know it might be frustrating to say, well, God, I want to know when the market's going to go down. I want to know when to invest. And you may think you know, but there's some smart folks out there that really understand. You just can't predict what the markets are going to do. Warren Buffett forecasts may tell you a great deal about the forecaster, but they tell you nothing about the future. John Kenneth Galbraith, pundits forecast not because they know, but because they are asked. And there's a lot of pundits out there now, for sure. I've seen pundits either on the news or on Facebook saying this or that, but take it with a grain of salt when you're making the investment decisions for money that I know is important for you and you can't afford to lose. Next question: what are the biggest risks to investors right now? Well, there's several risks out there, but they can also be viewed as opportunities. One of the risks is the volatility risk. There's a lot of volatility in the marketplace. And the thing is, with a risk, it also creates opportunities. I think one of the risks for not only business owners, but for families right now in this current state of the economy and what's happening with the everyone being quarantined and some businesses having to shut down, restaurant businesses, some medical practice, law firms, and there's a whole bunch of businesses out there that are having cash flow issues. One of the biggest risks right now is just purely cash flow. Will those businesses be able to meet their obligations, whether it be for leases, for their rents, and paying their employees and things like that? There are, at this moment, currently people who are struggling with that. Is there going to be a relief? Well, we'll talk about some relief programs as well. Another risk, that same risk for businesses is applying to families as well. There's a lot of folks out there. I mean, everyone's either got to pay rent or pay their mortgage. They've got car payments and they've got to pay for, their utilities and everything else. The risk for families is whether or not they'll be able to meet their obligations that they have with the current cash and income they have available. So I see this as a big risk for people, and that's why I'm kind of emphasizing this idea of, really be prudent with your spending. And if you are able to make it through this period, whether you're a business or a family or both, you're most likely going to be fine with your investments overall. If history is any uh, um, provides us with any story here, the investments and what you have invested, whether it be your real estate or your stocks and your bonds, they will recover over time. But you don't want to be forced into a situation where you have to sell investments when they're down. Another risk right now is getting overly fearful and saying, okay, look, I'm going to go to cash. It sounds like a safe opportunity to do at some point. Maybe some of you have already done it. Essentially, what you've done, if you get into cash and by selling stocks is while you're in cash, you've kind of locked in your losses for the moment. Another thing you're doing is you are uh, increasing your probability of really experiencing another risk. So let me explain this. There's essentially two kinds of risks when you're investing in the stock market. One a lot of people think about is volatility risk, the risk of the markets going up and down. And generally, risk and return are related. The higher the volatility, the higher the risk, the more expected return you have in that investment. But another really key risk that we look at when we're doing financial planning is the risk of somebody running out of money prior to the time that they don't need it anymore. So prior to the time of passing away, most people want their investment funds to be used in retirement and then beyond that with their beneficiaries. So when you go to cash, you're kind of by definition, the way finance works is you're lowering your expected return. And let's look at this a little more. So this is the some capital markets from 1926 to 2015. If you invested or dollar, or this converts the value of a dollar over time from 1926 to 2015. If you use treasury bills as a proxy for cash, $1 turned into $21. If you had invested that $1 into U.S. small caps, that $1 were to turn into a little over $16,000. So when we look at expected returns and how these have worked historically, you can see that the returns in the stock market over time obviously have been higher than our proxy for cash, which is treasury bills. So if you would have gotten scared at this moment here and gone into cash, it might have made you feel good, lowered your anxiety a little, but if you stayed there, it would have reduced your overall expectation of your future growth and future wealth. And that's how we look at things. So by being in cash, you increase the probability that your money is not going to grow as much as you need it to grow. Again, that is a unique risk that a lot of people don't think about when they're thinking about risk. Most of the time they think about this volatility risk, but not the risk of running out of money. And that's one of the things we're really concerned about when we're talking about financial planning. So that's a risk for investors right now. And when you're trying to market time, remember, it's not just, okay, I got out at some point. You've got to get out at some point. And if you're really looking to grow your wealth over time and get back in the stock market, you've got to get back in at some point. It's got to be the right time. And the problem with getting in and out of the market is when the markets recover, they usually recover very quickly and at a moment when we don't feel like it's time to happen. Most times you're feeling, investors are still feeling anxious and nervous at that moment when the markets recover. And we'll look at this a little more. This is the market's response to a crisis that we've had historically over time. And this is a 60% stock, 40% bond portfolio. And you can see what it's composed of down here. And we'll just look at the stock market crash first here in 1987. That was a significant downturn in the market. And the blue represents what this portfolio did 1 year after this crisis. The yellow is 3 years after the crisis, and the green is 5 years after the crisis. So 1 year after the crisis, this portfolio recovered 21%. That's a pretty short time period. And if somebody had been in cash and they missed this recovery period, their overall long-term wealth is going to be affected negatively compared to the person who stayed in the market. And a lot of times people don't get back into the market once they've gone to cash until they start feeling better, maybe 3, maybe 5 years down the road. So you can see here as time goes on over the 5-year period, there's been some significant returns that investors have reaped the reward of. And For those that didn't get out and go to cash and did not miss these, they were able to take advantage of these. So just some perspective of what I'm talking about. Um, Going back to our question, what are the biggest risks to investors right now? There's volatility risk, there's cash flow risk for people in their daily lives, and then there's the risk of minimizing their future returns by trying to time the market and get out of cash, get out of stocks and go into cash. And you can see here, I think this slide represents that most clearly. What are the best opportunities for investors right now? Well, this is an interesting one. I think a lot of people, you're going to see a lot of news out there of certain stocks that, you know, have a lot of potential right now, whether it be individual stocks, individual sectors, maybe some countries. And in my opinion, that's more speculating and gambling. So when you invest in a particular stock like that, you may win over time, or you may lose over time. That company may do well, or may not do well. So it's really hard to tell over time how any specific kind of rolling of the dice will do. When I invest for my clients, and what we generally do is we're not out there to gamble. We're investing for kind of nest egg money that people need in their lifetime, and they can't afford to lose it. So the answer to this question, what are the best opportunities for investors right now, is really the same opportunities that have always been there. One, investing in the broad markets, the broad stock market. That has over time provided investors with healthy returns over time. And investing in those factors out there that we've seen have provided a premium to market return. So let's look at this a little more closely. So there's been a premium in investing in stocks over bonds, and we'll look at that in just a minute. There's also certain premiums out there for different parts of the market that we can invest in. There's the size premium. Smaller companies have tended to have a higher return than larger companies over time. If you look at this phenomenon in the US between 1928 and 2015, on average, on a yearly basis, small companies have outperformed large companies by 2.28% on average every year. Now, it doesn't happen every year, and we'll look at that data in just a moment. But the point being is uh, smaller companies have outperformed larger companies in the US, internationally, and in emerging markets on average consistently over longer time periods. Value companies have outperformed growth companies. This is called the price premium. By this amount, it's been persistent in the US, internationally, and emerging markets, and profitable companies have outperformed lower profitable companies by this amount in the blue, US, internationally, and in emerging markets as well. So again, back to this question, what are the best opportunities? The same opportunities that have always existed out there, we feel are still out there. And historically, it's proven a good thing for investors. So let's take another look at this. Back to this opportunity that's out there. Is there an opportunity in the stock market right now? Is there still value in the stock market? Well, if we look at it historically, how often has the stock market beat cash? And we've got T-bills here as a proxy for cash. From 1928 to 2015, the stock market has beaten the, and this is the total US stock market index. It's outperformed cash or T-bills 69% of the time on any given year between this time period. So those are pretty good odds. Now, the flip side of the coin is 31% of the time on any given year, cash has done better than the US market index. So going back to this question, what are the best opportunities right now? There may be a time period, this may be one of those years where cash actually beats the stock market. We don't know. But we know the longer that you're invested, the more probability you'll have that you'll see your stock portfolio outperform cash. And you can see over a 15-year period, you've got a 90%. Historically, there's been a 96% probability that the U.S. stock market index has outperformed cash. So um, that's why we see still opportunity in the stock market in these factors. And you can see the same story exists with the value premium, the small premium, and the profitability premium. So in summary, what are the best opportunities for investors right now? Uh, don't try and outsmart yourself and get fancy. You may or may not win there. You have a higher probability of looking at those opportunities that have always existed and that we know historically we've been able to provide value to investors. With bond yields so low, is there any reason to own bonds at all? Most definitely, yes. If you've built a strategic investment plan and you've got bonds in your portfolio, there's no reason that we can see right now to sell those. As specifically, we don't want to make decisions on whether or not to buy bonds on the yields. There's a lot more factors that go into play than just looking at the yields alone. In my investment philosophy, what we want to look at when we're investing bonds, we look at the bonds as a safe haven. Excuse me. And the way we do that, it's a what we call an elegant strategy, but it's fairly simple, but it's a little harder to implement. We're looking at diversification, so we diversify globally in our bonds. We have generally high credit quality investment grade bonds, and we have lower maturities. And we keep it simple. We take our risk in the stock portion of the portfolio, and we want our bonds to be more of the safe haven for our portfolio with low volatility. So, sure, we see no reason at all if bonds make sense in your strategic plan. There's no reason at all not to have those included in your portfolio. Okay, going back to businesses, there's been a lot of business owners out there that are having issues right now. They're having to close their practices, whether it be medical practices and law firms, um, uh, entertainment industry. There's a lot of folks that are having issues, especially folks that have employees and things like that. And this is that whole idea of one of the big issues and the risks in this current environment is cash flow, whether it be for businesses or families. So the CARES Act, as you know, or you may have known, has been implemented. What I will tell you is I've spoken with a lot of CPAs and folks out there that are getting really smart on these programs. One of the things that's coming out is that there's not one person who knows everything. And it's going to be a little frustrating for some time as folks are applying for this because the systems that they're getting up aren't fully functional. They're getting overwhelmed a little. A lot of the people that are processing these loans don't know everything. They don't have all the answers. And so there's going to be a little frustration level out there. That is the one of the first things that I've found in talking to folks. But there are some programs that I want you to be aware of. First off is the Paycheck Protection Program, PPP. A business owner can get up to $10 million at 0.5 fixed interest rate. I'm not going to dig into it more than that, but it's out there. And then the emergency loan program that you can get $10,000 in advance, and the business does not have to pay it back. And there's some other benefits from this program. I think one of the keys that I've learned as I've spoken to folks out there in the industry, look, if you're a business owner, you should apply for the EIDL as soon as possible directly on the government's website. And we'll look at that in just a moment. The business owners have to apply for the PP program through a bank. So it's a little different. EIDL is through the government, and PPP is going to be something that you apply for through the bank. So let's look at this a little more. Again, the Paycheck Protection Program, you'll have to work through the bank on that. And again, there's going to be some growing pains out there. A lot of the folks that you talk to are going to, some of them are still getting up to speed on this, and some of the onboarding systems are lagging a little. Emergency Injury Disaster Loan Program. Well, if we go to COVID-19 relief.sba.gov, you can see as we pull that up, it actually loads us up right to what they're calling the streamline eligibility verification and application process. So again, that's COVID-19 relief.sba.gov. And if we just go to sba.gov, you can see right here, it's right on the splash page. It's got the small business guidance and loan resources there. And you can kind of dig in to what kind of relief you can get. So I'd recommend, as a business owner, you go ahead and look at those websites. And let me make sure we're sharing here. And let me get back to where we can see our presentation. So again, I think the big difference is PPP, remember, that's through the bank, EIDL. Just go to the SBA website. And a lot of the EIDL, or the Emergency Injury Disaster Loan details, they're designed for expenses that could have been met had the disaster not occurred, including payroll and other operating expenses. So if you're a business owner and you need relief, go ahead and go to that website now and go to your bank for further insight. And again, I think cash flow, as you know, is going to be a big deal for business owners and families. Next question. Are there any investments or financial planning strategies I can take advantage of in the downturn? Generally, we're looking at, again, the same opportunities that we looked at from before, from an investment standpoint, for planning and portfolio management. We're continuing to watch opportunities for rebalancing. You don't want to be too quick on the trigger when you're doing rebalancing, when there's a high volatility in the marketplace. It can cause you to, buy a whole bunch of stocks one day and sell a whole bunch of stocks or investments the next day when you didn't really need to do that. If you have any further questions about that, you can give me a call or email me, and I can talk to you about that a little more. One thing you could think about that, if you were considering a Roth conversion or partial conversion, it's always better to do that when you've got a lower account value. That way your tax burden isn't as high. Now, if you're going to consider this, doing a Roth conversion because maybe your portfolio value is down and you think it might be a good time to do that, do an analysis on that and check with your CPA and just double check with the key tax consequences on it. But those are things that we are continually looking at from a planning standpoint. And just a couple ideas for you. Should I invest or pay down debt given the current state of the market? Well, again, going back to this idea, I don't know your particular circumstance as an individual, but in general, in an overabundance of caution, in this idea that I talked about, that cash flow is going to be a big deal for a lot of people. We don't know how long this is going to go. We don't really understand the overall impact it's going to have on the economy and jobs and our abilities to work and create an income for our families and our businesses. So in an overabundance of caution, I'm talking to my clients about the importance of having cash available to supplement any income needs that they may have. And so let's take an example. Let's say you've got a whole bunch of cash sitting aside right now, and you've got an opportunity to use that cash to pay down your mortgage. hey, might be a good idea in your particular circumstances. All things being equal in this environment, I would say think about maybe holding on to that cash because you may need it depending on how long this goes. And once we get through this and things kind of clear out and the volatility decreases and we have a clear path on moving forward and things get back a little more to normal, then we can start thinking about maybe paying down some debt. So just my thoughts on that. Again, I think cash flow is going to be very important for people and survival, both with their family finances and their business finances. So in summary, look, let's keep in mind that if we can survive this from a cash flow perspective, historically, investments, the markets have recovered. Uh, it's very difficult to try and outsmart the market, predict what the market's going to do. It's out of our control. So let's not try and control those things that are out of our control, and control those things that we really have in our control. I discussed a few of those things in the last few minutes here. And Kenneth French, who's a leader in finance, a PhD up at Dartmouth, and a really sharp guy. I think this is a great quote to leave this off with: "Is the market is smarter than we are, and no matter how smart we get, the market will always be smarter than we are." Really, what they're saying is, look, the market incorporates a lot of information out there. It's probably one of the best sources for information out there, and it's hard for us to try and outsmart the market, if not impossible, over time. So don't try and time the market. Don't try and predict what's going to happen. It's going to do what it's going to do when it wants to. And we can definitely be rewarded by all of that over the time if we make intelligent decisions. Don't let the fear and anxiety of what's going on today overwhelm our decision-making process. So on that note, I hope you found this insightful and some perspective for you. Again, I wish everybody a safe and healthy day today. And if you have any questions, again, feel free to get back at me at morgan.smith@wpwm.com. And let me stop my screen share here. And I will say goodbye again. Stay safe and healthy. And we'll talk soon. Take care.